All right. Back to work. You know what time of day it is. I'm a little bit early here this evening, I understand, but it's time to get back to work here, guys and gals. Got a lot to talk about in tonight's video. It's Tuesday evening after all. It is October the 29th, 2019. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, in case you're here for the first time, I help traders find high-quality setups using a very simple three-step strategy that we teach and trade together every morning in the trade room. But my job's a little bit different tonight, right? My job is a little bit different tonight. My job tonight is to help you guys find the best levels of support and resistance so you can use the best entries and exits for tomorrow. And most importantly, the most important traps to avoid in tomorrow. That's Wednesday's trading session. And we have quite a bit to talk about on this video tonight. We'll first start off tonight with the calendar. We're going into some earnings, end of the month. Got a big news report tomorrow. We'll talk all about that tonight. First thing out the gate tonight. Then we'll grab some charts. We got some oil, some S&P, some Nasdaq, and how could I forget about that yellow metal, those gold futures. I'm going to jump in first tonight, though, to the black gold, the Texas T, the crude oil futures. Boy, oil got knocked down this morning, but it came roaring right back up. We talked about that short covering rally in last night's newsletter. They might have put their back into this one and now running this thing back higher. Let's grab that chart and let's see what this thing looks like here. Let's get this party rolling tonight on that oil. Now, like I said earlier, they really got knocked down there at the beginning of the session. But sure enough, though, right, got that big 1, 2, 3 reversal and come roaring right back higher. Now, at this point now we can see the market is bullish. And so we're trying to find some levels of support that we can buy off of. And one of my favorite ways to do that is with a hidden channel. So I went out and found my hidden channel, and now I'm looking for a chance to buy this oil right now. And I've got a couple patterns I'm watching for under here to be buying off the low of that channel. Now, of course, tonight we'll talk about where my targets are overhead. Got a lot of open space overhead. So we'll talk about the specific entry patterns I'm watching for to get long. Also, the specific exits I'm looking for here to maximize that runner. And of course, I haven't forgot about those bears out there. Tomorrow is a Wednesday. This could easily turn for the bears here. What does a bear reversal look like? Where can we get short on a bear reversal? It's going to be a little more difficult than I think we're expecting for these bears to grab it. So we'll talk about those details tonight on the video as well. Looking to be a buyer here on crude, but I've got a couple patterns I'm waiting for right now. I'm going to talk a lot more detail about that tonight on the video. Over on the S&P, what do you see right now? Range, right? Definitely a range-bound market. Range-bound markets are very, very simple in theory, right? Buy low, sell high, and avoid the middle. Buy low, sell high, avoid the middle. In theory, ranges are pretty darn simple. But when it comes to actually executing that plan, I've got a couple key things we'll talk about tonight. I want to buy low. But how low do we go? Is it a relatively shallow pullback? Is it a deep pullback? That's a big difference, right? Do we go higher? Remember, momentum is bullish right now. As we go higher, what patterns will we look for to sell off the high? What patterns are we looking for to buy off the low? Buy low, sell high, avoid the middle is the plan for tomorrow. However, because of that bull bias and because the size of this range, in tonight's video, we're going to talk about the specific buy patterns here to buy low, to buy really low, or to sell high. Or what if this market breaks higher? We'll talk about the good, the bad, and probably a little bit ugly tomorrow for the S&P as well. So make sure you stay tuned on the E-mini. How about some Nasdaq here? Nasdaq. Now the Nasdaq, what do we know right now? We know we're bearish. That's pretty obvious. What else do we know? Is that 5? 1, 2, 3. Yeah, that's 5 measured legs down. They're very small legs. And so we know we've got a bear market, and we're starting to get down to some key areas of support here. What do I want to do in a bear market? I want to sell. I want to sell where? I want to sell at resistance. So I know I've got some support in my way here. And we'll talk about some traps to avoid. I'll also talk about how you could buy this market for a possible reversal tomorrow. But more importantly, we'll talk about some key sell setups I'm watching for right now. I've got this channel. I want to sell off the top of that channel. But speaking of channel, Do you see something interesting here about this channel? This channel looks different, doesn't it? It does. It's a very wide, it's a very flat channel. What does a flat channel tell us? Flat channels tell us momentum. And tonight we're going to talk about why momentum really will be one of the most important parts of the plan for the Nasdaq tomorrow. We get an opportunity here to be a buyer on it. We can definitely be a buyer with the right pattern down here. And we can absolutely be a seller. But I've got to respect what? I've got to respect momentum. And we'll talk a lot more detail about momentum and how to use that momentum on the Nasdaq tonight. And then, of course, wrapping up tonight on the yellow metal, those gold futures. Boy, we talked about spike in ranges in last night's newsletter. Big old spike down into a pretty much a range here, right? It wasn't the prettiest range we've ever seen. What do you do with a range? You buy low, you sell high, right? You buy low, you sell high, and of course you avoid the middle. Now we know we have a bear bias to it, so we definitely want to be selling overhead. But look what we had here. A real strong move up, right? See that strong move up? What does a strong move tell me? Momentum. Yeah, momentum is the big clue there. And what does that momentum tell me? It tells me that to be a seller above the high of that range with all of that bullish momentum, I'm looking to get some traps up here, right? Got one very specific pattern I'm watching for that will help me avoid the middle, help me sell off the high. I'm not going to give it all away right now. We'll talk a lot more details here in the video tonight. And then, of course, trying to be a buyer off of that low. I want to sell the high. I want to buy the low. I want to avoid that middle. We'll talk about the specific entry patterns we're looking for on that tomorrow. And what if it runs? If it runs, we got some key levels waiting overhead. We'll talk about how to qualify a reversal, right? And how to trade that reversal as well. We have a jam-packed video in store for you guys and gals tonight. I'm excited to be here as well. We've got some gold, Nasdaq, S&P, and crude oil. Before we jump into the video tonight, though, before we put all the pieces together, as I always do, I want to remind you, make sure you join our mailing list. If you haven't done so yet, make sure you join. All I need is your name, your email address. Hit that subscribe now button. Remember, right before I publish this video newsletter, I send out an email to everybody on our mailing list, and I want to make sure that you get that email. That way you know exactly when this newsletter goes live. So don't delay. Join the mailing list. It's right there on the homepage of our blog at sidewaysmarkets.com. If you're on the YouTube channel right now, I'll put all the links in the description of that YouTube video. And just a quick heads up on this, when you subscribe to this mailing list, your job is not over yet, because I'm going to send you a very important welcome email. And in that welcome email, have a bunch of great free resources for you, and there's a verification link in there. You need to click that verification link. That way I can get approval to send you the email every evening. So don't delay, guys. If you're on YouTube, find those links in the description of the YouTube video, right? If you're on the blog here right now, just scroll right up or down, grab that mailing list, join it up, and then again, check your email inbox, because I'm going to send you that welcome email. Now, how about some questions, comments, concerns? How about some feedback? I'd love to know down in the comments section here tonight. I'd love to know. Got a question for you. If you could go back in time and start over again, what would you do differently? I know exactly what I would do differently. I would skip the indicators, and I would learn how to use a combination of momentum, channels, and the 2-try rule. That's what I would do. If I could do it over again, I would remove all the indicators, I would skip the automated stuff, and I would focus on 3 things: momentum, channels, and the 2-try rule. Now your turn is next. If you could start it over again, drop me some comments in the comments section. Let me know what you would do differently, okay? Or maybe you're brand new here. Maybe you're a brand new trader overall, right? You're just getting started. In your opinion, what's the most important thing that I can teach you in this video? Is it discipline? Is it technique, right? Is it technical analysis technique? Is it mindset? Is it entry patterns? What's the most important thing if you're a rookie out there that I can teach you in this video? Let me know in the comments section, because that way I want to keep doing more of that every evening for you guys. And don't forget, while you're down in the comments section, do me a huge favor, will you? Hit that thumbs up button for me. Believe it or not, every time you hit that thumbs up button, YouTube helps me to expose this video to more traders who are dying to learn this great strategy. So help me spread the love, post those questions, post up feedback, and what would you do differently, right? Post that in the comments section and hit that thumbs up button for me. Don't forget, subscribe to our mailing list, right? And of course, post those comments. And then don't forget, if the comments section isn't quite your bag, baby, don't forget you can always call that toll-free phone number, that live support tool. You know, call me in the office. I'm always here. Maybe you want to know who's the best brokers, the best fees right now, the best data feeds. Or maybe you want to know how to get access to our trade room on a free pass. Or maybe you want to get access to our free trading classes. Okay, any questions you have, call me in the office. All right, I'm a pretty nice guy. Call me in the office. I'll be happy to answer the call, answer all your questions, and that way you have the information you need and you can make a confident decision going forward. All right, guys? So don't delay. Call the office if you guys have any questions. In the meantime, let's get this party rolling here, right? We got some World Series games to watch tonight, don't we, right? I am trying to get this video done a little bit earlier here going forward, though. Just so you know, I'm always trying to tinker with my schedule, trying to get this video out as close to 4 o'clock Eastern, 7 o'clock Eastern, 4 o'clock local time for me here in Los Angeles. But I digress. Let's jump into the calendar here for tomorrow. Tomorrow, of course, is Wednesday, October the 30th. No, it's not the last day of the month, but we do have 2 more days left in the month of October. Now, we've talked about this quite a bit the week so far, right? What do we know about the end of the month? End of the month is what? Volatility, right? Volatility increases as we go into the end of the month. Traders become more risk tolerant as we start looking down the barrel of the end of the month of October. So we know that as traders start to become more acceptable to risk, the markets tend to start getting more volatile. What else do we know right now? We also know that before the market opens and after the market closes, we've got earnings. If you're trading in the overnight session right now, be aware. We've got a lot of earnings coming out through the end of this week, after the close and before the open. That hour after the close, that hour before the open, if you're in Asia, if you're in London, or if you're an early bird, if you're a night owl here in the US, be careful. We are right in the thick of things for earnings season right now, and you saw those big moves overnight because of that. So please be aware of that. What else do we have going on right now? Tomorrow, right? We got a bunch of news tomorrow, don't we? We got some. Let's get this scroll down here, right? Tomorrow, big news here for tomorrow. What's the big news for tomorrow? FOMC, right? Got a lot of news tomorrow, actually. We got the GDP report at 8:30. We got the petroleum status report at 10:30. And then let's just throw one more on top. Let's put the FOMC announcement and the press conference at 2 o'clock Eastern time. So 3 big news reports tomorrow. Tomorrow is going to be a busy, busy day. We're going to get the party rolling here tomorrow, right? They'll crack the keg open tomorrow. I don't mean to joke around about that stuff, but they'll get the party going tomorrow morning, right, at 8:30 Eastern time with that GDP. That will definitely be on everyone's mind tomorrow morning. And of course, that will hopefully get us started for a good session tomorrow in our trade room. Then you've got the petroleum status report at 10:30 Eastern time tomorrow. Don't forget, as I always remind you guys, after about 10:15, right? After about 10:15 on Wednesday mornings, just crude oil, you really got to be careful those 15 minutes ahead of it. And then I always say recommend at least about 10:45 until after the dust will settle. So if you're an oil trader, you know, like for example, for the GDP report, I'll give it 5 minutes, 5 minutes before, 5 minutes after. And a lot of times, it's not even 5 minutes after. It's just a couple minutes after. When it comes to the oil report, though, you really want to give it that kind of buffer zone. Put your helmet on, put your water wings on, right? And just kind of wait in the shallow end from that 10:15 to 10:45. Now, I know what some of you guys and gals might be thinking right now. Well, isn't that a big news report? Isn't that going to give a lot of volatility? Can't we make some money on that volatility? And here's the big problem. Right? Yes, you can make some money on that volatility, but you can lose just as much. And I try personally, just so you know, to avoid any scenarios where I can lose a big chunk of my account in one trade. Right? The reality is your stop loss will not protect you against big losses during major news reports. Okay? And the real problem is you can't practice it on a simulator. You cannot replicate the entries and exits trading news on a simulator. I'm sorry, guys. The only way to really get a feel for the slippage getting in and the tremendous risk of slippage getting out is to do it on a live real money account. It's the only way to get the feel for it. So if you're thinking, well, I've been practicing this on a simulator, I don't want to burst your bubble, but it's better that I tell you this now, right? You're not going to get those same fills trading news, okay? Everything else is pretty similar, right? Unless obviously you're trading big size. But trading news, be very, very careful. Yes, you can make some money off those news, but again, anytime there's a scenario where one bad decision can take a huge chunk of money out of your account, it's not just the money, it's the confidence that you lose if you lose that big chunk, okay? If you want my opinion, sit on hands, 10:15 to 10:45. Let the craziness come and go, and then get back to your plan. And then speaking of plan, the plan is to get out of there tomorrow morning relatively early. You got to have a good reason tomorrow to be trading after 11 o'clock, most likely, because you got that FOMC meeting announcement at 2 o'clock. This is very similar, if you're in Europe, very similar to the ECB, where they make the announcement, and then they walk over to the table, and they talk, right, to the reporters, right? So there's the FOMC announcement, and then about 15, 20 minutes later, Powell and co. will take the stage, and they'll get peppered, right, with their live Q&A. The good stuff is usually going to be about 20, 30 minutes after that announcement. So 30, right, 35 past the hour is usually where you'll start seeing the dust settle a little bit, and you'll start to find some structure that you can use. Now, my recommendation is the same for you as it is for my clients as well, and that is you want to make sure that you've traded at least 3 or 4 of these practicing before you go trying to trade a real one, right? So, tomorrow should not be the first time you go live and, I'm going to trade the FOMC announcement. Probably not a very good idea, right? That's like going up and trying to hit a fastball off of Justin Verlander tonight, right? First time with a bat in your hand. Probably not a good idea. Okay, so be careful tomorrow afternoon and tomorrow morning around those news reports. My best advice tomorrow, though, if you are trading in the afternoon, take an early lunch, right? 11:30 to 12, 12:30, right? Early lunch. Come back after 12:30. Get your charts all prepped up. What I like to do is plan A, B, and C, bullish, bearish range, and then wait for the announcement to come out. Give it about a half an hour. Let this stuff calm down. And if it doesn't calm down, remember, they're talking rate cut tomorrow. Everyone's banking on another 1/8 to a 1/4 point rate cut tomorrow, and that will make the markets go bonkers. So it may be difficult to really kind of get your arms around some structure, right? And the reason why I say that is you're not just trading the reaction. You're waiting for the reaction, waiting for direction. Okay, where's my channel? Where's my range? Where's my levels of support? Right? You're finding something to use to structure a trade. Guys, we're going to talk a lot more about this tomorrow morning in our trade room. And every morning, 8 o'clock Eastern time, we open up our trade room. So big news tomorrow, GDP to get the party started. We get the petroleum status report at 10:30. Remember, 10:15 for oil. And then, of course, the FOMC announcement. Early lunch, come back, prep those charts, let the dust settle, and we'll finish up the session tomorrow afternoon in the wake of the press conference tomorrow afternoon. What else do we have going on tomorrow? Well, there are a couple known unknowns, right? There are a couple known unknowns. We heard today the back and forth of the U.S. and China trade talks. First it was, we're going to sign the deal. Then it's going to, no, we're working on the deal. So it's been a little bit back and forth. That's been a big yo-yo in some of these overnight markets. So if you're trading overnight, watch out for those headlines. It is a known unknown right now. We know it's lingering out there. We know we're going to hear from China. We know we're going to hear from Trump. We know we're going to hear from the White House. How will the markets respond to it? We don't know yet. But we know that that's going to probably be impacting us at least at some point tomorrow. What else do we know? Brexit, right? They've now pushed the extension now. That soap opera continues to develop, and it seems like every single morning there's another development that is adding another big unexpected move to the market. Those are the known unknowns in addition to the overnight earnings after the close and before the open. Don't forget, we're going to talk more about this later this week. We get the employment number on Friday, 1st of the month, November. That is a ways away right now. So we'll get through tomorrow first. Early in, early out tomorrow. Sit on hands around that major news. Trade the reaction once you can get your arms around it. And again, I'm going to put together a plan tonight. We'll do it together tomorrow, like we do every morning in our trade room. Let's grab those charts here now. Enough of the introduction here, Joe. Let's get to work here. Let's get to work. I got some oil, S&P, Nasdaq, gold, and we'll wrap up tonight on that mighty yellow metal, the gold futures. What do we know about oil right now? We know that oil started off as a bear market. It then took off 1, 2, 3, right, into a 1, 2, 3 reversal. That 1, 2, 3 reversal leads up, pulls back, goes higher, gives me those 2 higher highs, and we know we're bullish, right? That's a pretty obvious thing at this point. We know we are bullish in a bull market. I'm looking to be a buyer at a support level. So what I've done is I've gone out, I marked up these 2 highs, I brought that trend line down here, copied and pasted it, and now that's going to give me a nice little hidden channel there. Okay, that's one area of key support I like. Another thing you'll notice here, we go up, down, up, down, up, down. What is that? It's a very small, you got it, trading range. I can take that trading range and I can use that range to find my key area of support, right? Trading ranges, buy low, sell high, trying to buy underneath that trading range. What other level of support do I have here? We go up, we pull back, we go up. What is that? That's a reversal line. They just tested it here just shortly a few minutes ago. So we know that's going to be a level of support. I could go even further and say this is a spike in channel. Spike up into a channel. And since you guys tune in every evening to this newsletter, what does a spike in channel tell us? It tells us the base of that channel. What is the base of a channel of a spike? It's support. That's what it is. It's support. So we've got no shortage of support levels down in this 55, 45 to 55, 32 little area down here. Now all we need is a way to buy these. Now I know I've got some support down here. I want to be a buyer. One very obvious clue on this chart is you can see this strong move down. That strong move down, you're going to probably have some sellers here, I would imagine, that are going to confuse this now for a reversal. You know, they'll see the double top up there and they'll think, okay, right, we're going lower now. And they'll try to sell off this moving average. Okay, remember guys, there are lots of rookie traders out there that trade every day without a plan, without any discipline, and they're going to get roped into counter trend, really aggressive pullbacks. And when they do, I know exactly now where their pain points are. Right? I know exactly where their stops are going to be, and we can now use those stops as fuel. So what I'm looking for here is I want to see some rookies take the bait. They're walking right into a potential trap because of all that support. I know exactly now where their stops are going to be because rookies, not only do they not have a plan, but they love to use tight stops. I did when I was a rookie. I used like an 8-9 tick stop on crude oil. You're going to have a very hard time making money that way, that's for sure, right? No matter what the risk-reward ratio is. So we know the stops will be tight. I want to buy into those stops. And then if I can get it, I'll have to grab that pullback pattern for a combination. Right? A failure into pullback combination. Now, what if we don't hold this low? right? What if we don't hold that low? What if this thing kind of shoots lower here at the Asian Open? What if it really pushes lower? Then what do I want to do? Well, at that point now, momentum starts to build for the sellers. And so they're probably not going to give up as easily. And therefore, I want to let them try once, try twice, and then I'll look for that failure into pullback combination. Did you see the difference there? So one of them is a relatively shallow pullback off the low of that channel. That's a failure off the moving average. Rookie seller failure into a buyer pullback. See that? Nice and easy pattern there. But if we really go lower, not a bear market yet, we'll talk about that in a moment. If we really go lower, now those bears, they're going to try a couple more times, right? Let them try once, let them try twice. Now we know where their pain is, and now we can buy right into those stop losses, get that moving average coming over, and we can buy that pullback as well, right? So failure into pullback from there. Good example, right? Strong move down, bears try once, bears try twice, then we can buy into those stops. Same idea, right? Same idea to get that run going higher. Now, what if we don't get the pullback? Right? What if we just simply don't get the pullback? What if it runs back up into that range again? Well, there's kind of two scenarios to be ready for. If it runs back up into that range, watch it go sideways, and then simply do it again. Wait for the pullback. Wait for those rookies, right, to impulsively try selling that breakout pullback and buy into those stops. What if we don't stall? What if we go running higher here? Two patterns. One's going to be a 1, 2, 3 move higher. Mark up that high, mark up that low. I'll buy off the low of that new hidden channel. Okay, that's a great pattern there as well. What else? Strong move up. 1 try for the bears, 2 try for the bears. We call this a 2-try breakout pattern. That's another option for us. If the market doesn't want to pull back all the way and it wants to jump and run for us, that will work as well. Okay, so we've really got plenty of options here to be a buyer. How about being a seller? How can I be a seller on this? Well, I've got my strong move down. If these sellers, if they can hold that pullback, I'm waiting for a run off of it, right? I'm looking for a failure here so I can be a buyer back up. But if those sellers, if they can hold it and make a run, what do we call that? We call it a 1, 2, 3 reversal. 1 is a strong move down. 2 is a pullback to the moving average. 3 is a strong move off the moving average. If we get that 1, 2, 3 reversal, what do you do with that? We mark up the low. We mark up a trend line from low to low. And then we go up and we look for what we call a hidden channel. Look to sell now the top of that hidden channel. Does that make sense? Right? That's pretty simple. Where's my target for the downside now? I would say it looks like, I would say probably going to be that low right there. Right there. Yeah, that looks like it'll be a pretty easy spot there, right, for your profit. 54.71 if those sellers can hold on tight. Now, what if we run higher here? If we run higher and we start going sideways here tomorrow, can I sell? Now, it's a range. Can I sell high? I can, but I need that crown reversal pattern, right? We go up. Buyers try once. They fail to retest the high. Buyers try twice. Trap high. And back down we go. This is called a crown reversal pattern. It's really the most reliable counter trend reversal pattern that I know. You're not going to get it every time, so don't expect it every time, right? But it is very, very reliable. Now remember, this requires us to go back into that range and go sideways again. Okay, if it just blows right through it and keeps going, don't even think about being a seller on this market right now. All right, guys. So we've covered a lot here so far. We've talked about a failure back in. We talked about that nested failure if it really pulls back. We talked about going up and then waiting for the buy below it. The reversal with that 1, 2, 3 reversal. And of course, if we do end up back inside this range, that crown reversal for that, right? For that sell. Great stuff here so far. And don't forget, you can always go back and watch the video again if you want to recap. And we obviously will be looking for these patterns tomorrow in our trade room as we do it together. Now, I want to give you even more information, but I got to keep this video going, right? We're already almost 30 minutes into the video right now. So here's what I'll do. If you want a deeper dive into all of these patterns, my 4 favorite patterns, my 3-step trading strategy, grab that link in the upper right-hand corner here for me, and that will give you access to our free trading class. The free class, it includes all access to our lessons on our 3-step strategy, right? You'll learn my 4 favorite patterns, hundreds of examples, and all access to the members section, right, of our free class. And you'll also, of course, get an invite to join me in our trade room on a free pass. So grab that, right? Grab that link in the upper right-hand corner. Take the free course. Okay, don't forget, if you're on the blog right now, put a big red button for you right below that video. But grab that link in the upper right-hand corner, or if you're on the blog, grab that big red button right below the video tonight and get registered as a brand new member of our free trading class, that we can learn all these patterns, see hundreds of examples of how we use these patterns on our favorite markets. Let's keep going though. Let's keep going. You guys know how to learn more. Let's keep going. How about some S&P? What do we know about the S&P? We know the S&P has a bull spike up into a trading range. Okay, spike in range, as we said last night, right? Spike in ranges. We know that when we have a range like this, it's got a bull bias. So I'm going to be a buyer using seller failures below the range. Okay? I'm going to use a similar pattern, but a nested pattern, 1 and 2, to sell above the range. Remember, we want to use different patterns to buy than we want to use to sell, right? Because of what? Momentum. So we know that from last night's newsletter, the plan was pretty simple. We knew we had a range. We knew that range had a bull bias. We want to buy low. We want to sell high. And of course, avoid the middle. So what I'm doing right now is I'm finding levels of support and resistance above the range and below the range that I can use for this. Does that make sense? I want to sell high and I want to buy low. So where are levels of support? Well, first of all, I've got my range. So with that range, I've got my range support levels. Okay, those are key levels of support. Okay, I also have my resistance levels overhead, very important levels of resistance overhead. Okay, we've also got that reversal line, which I really hope we can use here tomorrow, that 26.5 area. Okay, that is the reversal line. That would be a beautiful level to use for tomorrow. Okay, just above that gap over the weekend. What else do we have here? I got that measured move level overhead. That's a level of resistance. You'll notice I've also got my measured move on here. That's a level of support. And then you'll also notice too, I've got some of these kind of hidden channels, right? Mark off the highs, off the low. That's a great level of support as well. And if it really gets crazy, that trend line acting as support, that trend line acting as resistance. So as you can see, again, we know we're range bound. Buy low, sell high, avoid the middle. Good idea to go finding levels of support and resistance above and below the range. That way we can use them to structure our entries. So now we know where the levels are. And again, don't forget, you're going to learn a lot more about how to find ranges, how to use ranges as part of that free trading class. Okay, so grab that in the upper right-hand corner. Now, what's the best type of setup? Now, we talked briefly about this. We saw an example here, an example here, an example here today. We know the market is overall bullish. So if I go below the range, I want to buy it back up. And I'm technically going with the overall momentum of the market. So if I want to be a buyer underneath this range, all I really need is I need to get a failure, or what I want to get is I want to get a move lower. All right, I want to get underneath that range. Again, there'll be lots of rookie traders out there that are not prepared. They're not going to have a plan. They're not going to have the discipline to sit on hands when they should be. And that's going to give us an opportunity to capitalize on it. Okay, so we want to wait for those rookies, try to sell that breakout pullback. I can tell you from experience, I used to love breakout pullbacks when I was a rookie, and I teach my clients how to capitalize on that by avoiding the breakout pullbacks, but more importantly, taking them when they fail. You know, I'll never forget talking to one of my first trading coaches a long time ago. And his exact words were, you realize, Joe, if you did the opposite of what you did today, you would have made a lot of money today. And that was when the light bulb went off. For me, at least, I thought, you're right. If I stop taking these breakout pullbacks and I just simply wait for a trade that I would have taken to fail, I can make more money that way. Or I can make some money that way, right? Breakout pullbacks just are not very effective. So what I'm looking for is, I want to see that move lower. I want to see those sellers try to sell that pullback. And again, look at this one back here, right? We run under the range. We go down to a support level. We go back to the moving average. The sellers try to sell the breakout pullback for whatever reason. And guess what? It runs right back up into the range. You'll notice in this example over here, they actually get the failure into pullback combination. It's a failure into pullback combination, right? Now the pullback, you'll notice in that left, in the example on the left, that pullback is it's too close to the middle of that range. So I wouldn't take that one, but you're already in off the failure, right? You're already in off of that failure. So hopefully we can get something similar for this tomorrow. Get underneath that range, get those unsuspecting sellers to commit, buy into those stops, buy that pullback. Now, I mentioned earlier that there's that reversal line down at 26.5. That's just a little bit above the gap. So there is that weekend gap. If this thing really takes a tumble, you know what I mean? If it really takes a tumble, let's put it this way. If it gets into this secondary zone down here, if it really takes a tumble, now you know that momentum is going to be on the side of the bears now. And so now you want to let them try once, try twice before you go being a buyer on the way back up. Okay? Why? Because of momentum. Momentum is the reason why. That strong move down, it's just too strong. Again, you see something like this where it barely gets out the range, failure, buy that, right? But if it really tumbles, like in this example, let them try once, let them try twice. That will allow all the sellers to rope themselves in, and then, of course, we'll wait for it to fail, and we're literally buying right into that failure. Simple as that. Okay? Great setup. Stay patient for it. Don't forget, stay out of the middle, right? Stay out of the middle. Now, as we go higher here, how do you sell above the high? Very carefully, because it's a bull market. Now, look back here. Great example. We go up. We're trying to sell. So you got to make sure these buyers try twice. Once, twice, and then back down into that range. So if we do try to go higher here, remember, you're trying to sell above that high. It's a 1, it's a 2, and then sell back down. Why? Because momentum is bullish. And so you've got to give those bulls the benefit of the doubt. Make sense? Now, what's a breakout look like? Breakout. 1, 2, 3, breakout. Mark the high. Find the low. Buy the pullback. One of my favorite setups, a 1, 2, 3 breakout into a hidden channel pullback. Same thing the downside. 1, 2, 3. Mark the low. Find the channel. Sell the high. 1, 2, 3 breakout, hidden channel pullback. Now keep in mind, when I say pullback, I'm not necessarily referring to just the pullback setup that we learn in our free trading class. What I'm talking about is a pullback to that high, right? That pullback is usually going to be an actual failure into pullback combination. So imagine if you were to zoom in on that area, right? Imagine if you were to zoom in on that area over here. Okay, think about a failure, right? Off that high, buyer failure into seller pullback. Okay, selling off that high. And again, I'm just simply drawing on the screen right now. That's why I encourage you, grab that free class in the upper right-hand corner. That way you can get unlimited access to our members section. You can just grab all those examples and you can see what they look like, right? That way you'll get more out of our time together. Okay, so now you get some good breakout patterns as we go. Buy low, sell high, trade the breakout, grab that free course. That's it right now. We're looking good here on the S&P. Avoid the middle, right? Avoid the middle. Let's keep going. How about some Nasdaq here? So surprisingly enough, the Nasdaq and the S&P are quite different, aren't they? Right? S&P is pinned right to its highs. You can definitely tell that earnings were weighing on the Nasdaq here today. Okay, what do we know about the Nasdaq? We know we're bearish. We also know we're a good 5 legs down. And, although there's no reason why the market couldn't go 6, 7, 8, 9, 10 legs down, it's not very common. It's not very common to get markets to make this many legs before what? Either one of two things. Either a range, if the sellers don't want to give up, or a reversal going higher. Okay, I'm not going to say what you don't want to do is you don't want to assume that because it's gone so far, it's bound for a reversal, because it simply is not. But what we do know, though, is after a market's gone this far, we oftentimes are going to see sellers, they're going to grow weary of selling low, and they're going to want to wait for a better price to sell at. Sometimes those sellers will back off and the buyers will take it. And so we definitely know we want to be ready for either a range or a potential reversal. Okay, one more thing that really stands out to me on this is how flat this channel is. It's not the flattest we've ever seen, but you can definitely tell there really isn't a sense of urgency in this market. You know what I mean? There really isn't a sense of urgency. When you see a channel that is, really steep, relatively narrow, the way that I was kind of taught how to think about this is a one-sided market. Okay, momentum is all on the side of the bears. You can't make much money as a buyer in this type of market, right? It's very aggressive. There's a sense of urgency to it. If you were to take that channel now and kind of flatten it out, yeah, we're still bearish, but now this becomes more of a two-sided market. Because as you can see, you can make money on both sides. You could sell off the high and make money, but at the same time, if you're willing if you're willing to wait for it, you can actually buy off the low. There's enough movement there, right, to buy off the low. Okay, you can actually make money buying and selling that market. It's a two-sided market. What that means is you've got to respect momentum when we get back up to the opposite side. When I get back to the high of that channel, what's going to happen? There are going to be buyers here who are going to try to keep it going. Now, that can be good or bad as long as you know how to use it. Look back at the chart. Okay, look back at the chart right now. Let me get rid of these legs here so you can, right, get a cleaner chart there, right? So we know where that level of support is. Look what happens every time we go back above to the high of that channel. Where are we? We're back above the moving average. Right? We go back to the high of the channel. The buyers, again, because this is a two-sided market, the buyers are trying here to buy the pullback. And guess what? They fail and it sells back down. We go up, the buyers try to buy the pullback, right? Because again, it's a two-sided market. Okay, so what you want to be aware of is you can't just blindly sell off the high, right? It's not like an aggressive channel where you could just hit the sell button right at the highs. What you've got to do is you've got to wait patiently. That's why I said this can help you or hurt you. Wait patiently to let those buyers walk right in front of that train and just run them right over, right? The sellers selling back down to low of that channel. So as we go back to that high, just remember, I don't want to sell into it. Wait for those buyers to try to buy the pullback because they might be successful. Okay, you don't want to step in front of that freight train. Let those buyers try to buy the pullback. Then you know where their stops are, and you can now look for that sell signal. Now, one thing that you got to be careful about here, though, is the range. Okay, watching out for a range-bound market. Range-bound markets, whenever we go this far without one, I'm always expecting to see some sort of range. So that's definitely something you want to plan for here tomorrow. A bear market into a trading range. Now, if we go sideways here on the Nasdaq, which I would expect, again, we got earnings here overnight, so this could easily get shaken up from here. But assuming it goes sideways, what's the best way to trade it? Buy low, sell high. How do we sell high? We sell high using a failure, basically a failure pattern, a buyer pullback failure pattern. We call this a two-try failure. We wait for the buyers to go higher. Usually it's profit taking that sends it higher. We then wait for those buyers to try to buy the pullback, just like back here, just like back here, right? Just like we see as it goes above the highs. We try to wait for those buyers to buy the pullback, and we sell into their stop losses. Okay? How do we buy under the low? Can we buy the low? If it goes sideways here, can we buy it? We can, but we have to look for that nested, right? That one, that two, and that buy up. Why? Because you're going against momentum. So this is if the market goes sideways here on the Nasdaq. Market goes sideways on the Nasdaq. I don't care where. Could be here, could be lower. Doesn't matter. We go sideways, go up, let those buyers try to buy the pullback. When they fail, gotcha, and we're selling right into those stop losses. It's not a bull market. And again, you can see from the past here, we're looking for a very common pattern here. Very common pattern. Okay, now, what if it goes lower? If it goes lower now, let them get the gap. The gap is not my concern here. Okay, as far as I'm concerned, that gap is like any other level of support and resistance. It is a support level here, so is that measured move. Let them try once, twice, and back in again. Buy low, sell high. It'll be a slightly more conservative, more patient buy than it will be for a sell. Hopefully that makes sense. Now, if we can complete this rotation and get that measured move, wonderful. I'm going to wait for that profit-taking rally, wait for those buyers once again to try to commit off the moving average and look for that failure into pullback combination. Now, what if that profit-taking rally really goes, right? What if it really jumps? Is that a reversal yet? No, it's not a reversal yet, but it sure might be. And because of that, we let them try once, twice, and then we sell down, right? So again, if we just get a relatively small pullback like these ones are, we go up. It's still, momentum isn't very strong for the bulls. Anybody trying to buy that pullback is a weak hand, right? A rookie trader, probably dealing with small stop, small position, and we can run them right over, right? But if we finish that up and then we jump, we're not a bull market yet, but we're getting there. And because of that, one try, two try, let those buyers try a couple times, then you know where their stops are. Everybody's roped in now and sell right into those stops. Now, what would a reversal look like? I mean, let's talk about that, right? Because a reversal would be what? Be a strong move up, that's one. It'd be a pullback to the moving average, that's two. And it would be a jump off that moving average. You got it. Then we'll mark up the highs, we'll mark up that low, we'll find that hidden channel, and again, looking to be a buyer off the low of that hidden channel. And again, don't take that literally. I'm not talking about a pullback pattern. I'm just talking about a pullback to that low. I'll look for a seller failure below the moving average. I'll look for a buyer pullback off the moving average, strength, trap patterns as we run back higher. Speaking of going back higher, where would the target be? Up at 27 3/4. Right? 27 3/4. That's the high from yesterday. Now, as we go lower, what's my plan if we go lower? Well, again, because we're so far down here, if this thing keeps going lower, I'm really going to be waiting for that range. And if we can get that range, one try, you know what I mean? Wait for that range, one try, two try, and then selling back down again, right? You can see the examples of those patterns back here. So that's the idea. If it goes lower, we're still waiting here, right? We're still waiting. Now, what if it really shoots lower? You know what I mean? We get some earnings coming out, strong move down, pull back, go. That will work. Mark that low, mark that high. If we get a strong 1, 2, 3 breakdown, where do you think they're going? 8,000 most likely. Right? So if earnings come out and we're going bonkers to the downside, wait to hold the pullback, mark that low, find that new channel, and we're selling off that channel. Probably got their eyes on 8,000, that big round number. What about that 2-try breakout pattern? Would that work too? If it goes lower, it would. Strong move down, 1 try for the bulls, lower low, 2 try for the bulls, trap high, and of course a sell. Okay, and I put the emphasis on that trap because that's where you're going to get really the most bang for the buck on that setup. Because you're not getting much of a pullback, all you're doing is, that's a very strong move down. Okay, it's a very different pattern. The 1, 2, 3 is relatively calm. It's a 1, it's a pullback, and the 2 and the 3. It's that jump off the moving average that needs to be very strong in order for you to get a good feel for that 1, 2, 3 breakdown, and you can sell off that high. This, what I'm talking about though, is a strong move down. Right here. This is right here. There it is right there. Right? Strong move down, 1 try for the bulls, 2 try for the bulls, trap high, right? And that sell right there. Okay, that's the exact same pattern. Okay, so we run, again, got to be strong, very strong. 1 try, lower low, 2 try, trap, and go. All right, and again, you can see an example of that right there. Okay, so very, very easy if it goes lower, but it's got to shoot, right? Really got to shoot. Watch out for that range on the Nasdaq. And I got to say, I kind of hope that we get that range. That way I can look for that nested and off of that low, right? Up in that 1 and 2 and back down we go. Or maybe it ranges out 1, 2, 3 reversal, mark high, mark low. I mean, that would be ideal, because then we've got all that space for a short covering rally back up to smack right back to those highs again. Very excited for tomorrow's trading session on the Nasdaq. Let's wrap this up though right now on some yellow metal, some gold futures. What do we know about gold right now? We know the market is bearish. Big strong bear move down. Strong move down, we go up, we go down, we go up, we go down, we go up, we go down, right? Looks to be a range to me. So we know it's a range-bound market. We know it's bearish. What does a range tell me to do? Range tells me to buy low, sell high, avoid the middle. We know that already. What does a bear range tell me to do? A bear range tells me take that trading range, find your range expansions, buy low, sell high. Now remember, I can be a lot more aggressive being a seller with that bear market than I can being a buyer, because again, it's a overall bear momentum. Okay, so that's a really important factor in this. But you'll notice I marked up something really important, and that's that strong break higher, right? This is a real strong break as we went higher. And what do you see happening right now? We've got that 1, that 2. Now you'll notice what's happening. That's putting us right inside that range. I don't want to trade inside the range. I want this pattern, but I want it up here. Okay? I want to sell up here. That way I can risk small to earn much larger. If I sell right here now, my risk is here. My reward is nothing. So there's not a lot of convincing on that. It's not a great location. That's why you look for a trap. So we know right now I want to be a seller overhead, right? We know that. That's pretty easy. Strong move up. So what do? You wait for the nested. We call this a nested failure. 1 try for the bulls, 2 try for the bulls. Then we need that strong signal candle, but we're back inside the range. What's the best pattern to avoid selling low or buying high? What's my go-to pattern, my go-to entry pattern that allows me to avoid selling low? A trap. And that's why I mark up that battle zone overhead, because that's where we're going to have a lot of sellers waiting here overhead. Now, the main concern about this is if it reaches the other side of the range. Okay? Really, the only rule in this right now is I've got to get in before we get back to the other side of the range. Excuse me. Once we get to the other side of the range, all bets are off. Okay, then we're back into rotation again, and we'll wait for more details from there. So again, strong move up. Anytime we see a real strong shot, what do? let them try once, let them try twice. In this case, selling into stops, we're right in the middle. What I'd rather do is trap and sell from there. So keep your eyes open on that one here in the overnight Asian session. Now, what if we run back into that range? Sit on hands. Sit on hands. Up one try, two try, failure back down. Right? Same pattern we've talked about. Let those buyers try to go. Remember, there are lots of rookies out there. I know that you are prepared now, but there are hundreds of thousands, if not millions of people that are trading unprepared every morning in these markets, every afternoon for that matter too. Okay? You're going to find lots of ways to catch them trading off their instincts, and you can capitalize on that. Right? Let those unprepared, I don't want to say rookie traders, they may not be rookie traders. It took me a long time. I wasn't a rookie after a couple of years, right? But still, people still are not trading with a plan. So we know that when people see that strong move up, buyers are going to come in. They're going to think, oh, we're breaking out. Those big breakouts higher, they are so convincing. But we know that breakouts are not reliable. I'd rather sell into that failure than try to predict that breakout. Let's put it that way. So remember, when you sit down at your desk tomorrow morning, you got to be thinking, I have a plan. There are other traders out there that do not. Wait for that time when I can see those traders getting convinced into the wrong position, the wrong location, the wrong direction, and how can I capitalize on them? What I always tell my clients is think about what you would have done a year ago. Think about what you would have done before you started working with a coach like me, right? I always think, when I was a rookie, I would have bought that pullback. It would have been some moving average cross, right? Some moving average cross there, buy the first pullback after the moving average cross. Yeah, it's an unreliable setup though. You know it's unreliable because you spent 3 years trying to trade it when you were a rookie. Sell against it, right? Trade against it. Now, how do we buy off the low? Okay, how do we buy off the low? There's really a couple things I want to mention here. One is if we go back into the range, then we come down, I wanted the nested. I want to buy off the low, but I don't want to buy in a bear market. You'll notice that trend line down there, the pendulum swing, the amount move up, amount the move down. That all creates those levels of support below. Okay? So if we make a run lower, well, let's put it this way. If we go sideways inside the range, then we make a run lower. I'm still going against the momentum of the market by being a buyer, but momentum is not as great as if it was to go straight down. Does that make sense? Right? So if we go straight down, that momentum's a whole lot more intimidating to me than if we go sideways first. Can we agree on that? Hope so. Yeah, hope we can. So if it goes sideways first, then what? Nested. Wait for the move lower. Bears try once, bears try twice, and back up in from there. Okay? But what if we go straight down? If we go straight down, now this range may have disappeared on us. Again, we're new day, right? New day in Asia. So now, crown reversal. One try, two try, trap low, right? Trap low. What's the difference? The trap. The trap is the difference. And the trap is really important when it just shoots lower. Does that make sense? Okay? So a lot of this has to do with, as always, momentum. So a quick recap on this. We know we are bearish into a range. I want to sell high. Again, if I can get it in the short term, that trap high and back down. If we settle back into the range, I'm simply using that move up. Moving average comes over, right? Buyers try to buy the pullback. We sell into their failure, sell that pullback combination. Okay, again, you can see hundreds of examples off charts of how we use that setup in our favorite futures markets. Grab that free course in the upper right-hand corner to see more details on these patterns. I'm just drawing them up right now to give you a plan for tomorrow, and of course, get me ready to execute that plan tomorrow with all of our clients. As we go lower, if we sit inside that range, then again, it's a nested 1, 2. Back up we go. But if we just run back through, we run. Now, crown reversal. 1, 2, trap low. See, that's the difference there. It's a very small difference, but very, very important difference if you have experience trading with ranges. Now, how about a breakout? What's a breakout look like? breakout's a piece of cake, right? 1, 2, 3, breakout. Strong move up, pull back to the moving average. Hold the pullback. That's the key. Okay? Don't be telling me, well, the move was really strong, so I bought the pullback. That's a strong move too. How'd that pullback go? Not very well. Okay? Don't get roped into buying breakouts. Okay? They're not going to treat you very well. Yes, there's always an exception to every rule. Even a broken clock is right twice a day, right? You know the old saying. Yeah, there'll be examples of winning setups on every single setup, but don't confuse it for a reliable setup. That's the key. Okay? So 1, 2, 3, break out, mark the high, find the channel, buy the pullback. Target is where? Round number. Easy one. Same thing as a 4, right? 2 try breakout pattern. Strong move up. 1 try for the bears. 2 try for the bears. Trap low. And the buy again. Remember, this pattern, it's got to be real strong, right? Got to be real strong. It could be a very, very strong move higher. 1 try, 2 try. Higher highs, right? Higher highs. 1 try, 2 try. Trap low. Okay? Or we go lower. 1, 2, 3, break down, mark that low, mark that high, find your channel, sell the high of that channel. Or strong move down, 1 try, 2 try, trap and go. Okay, 2 try breakout pattern. Where's my next target? Where's my next target down here? Where's the next mission accomplished? 1478. 1478 looks to be, if we can break free of this area, it looks like 1478. Yep, that's what it is. You get your measured move. We'll call it 1480. 1480 will be, it's just a little bit ahead of that 1478, but 1480 there if they can get this thing to push that low. Okay, be right. Yeah, 1480 is what it looks like on that next measured leg down. We had that measured move that we talked about in last night's newsletter. All right, guys? So you got the breakouts ready to go. Remember, don't trade the breakouts, fade the breakouts until you get that 1, 2, 3 breakout or the 2 try, that FOMO breakout pattern. All right, we are locked and loaded for tomorrow morning's trading session. If you're in Asia, if you're in Europe, watch out for the overnight earnings reports. If you're with us tomorrow morning, we'll see you guys bright and early tomorrow morning at the opening bell. And guys and gals, don't forget, joining me every morning in the trade room is so easy. Get registered as an advanced member right on the homepage of our website. If you're on the YouTube channel right now, I'll put all the links, the description of the YouTube video, so grab those off of YouTube. If you're on the blog at Sideways Markets, there's a big blue button right below the video tonight. Grab that. And please don't forget, if membership is not ready yet for you, it's not a good fit for you right now, make sure you grab that free trial. The free trial has your free pass to our trade room, our free trading class, hundreds of examples of how we apply this strategy to our favorite futures markets. And don't forget, I'm always here. Call that toll-free phone number, shoot me an email, or jump on Skype, or use that live support tool over there, lower right-hand corner of the website. Keep in touch, and whatever you do, be careful tomorrow around that news. We open up tomorrow morning, 8 o'clock Eastern Time. As always, I want to see you guys right there with me. So get registered, get there early tomorrow morning, early in, early out. And as always, guys, if I don't see you guys tomorrow morning at the opening bell in our trade room, I'll see you back here same time, same place, tomorrow night on the next edition of our nightly newsletter. As always, my name is Joseph. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.